We have such a great panel to kick off day 2 of our virtual CXFS. This is the necessity to humanize digital and design with purpose. When it's brand experience and values that keep your customer loyal, it's a balancing act between user-focused technology and a highly personalized human connection. These panelists with me today are innovators who will reveal how their organizations are coupling design thinking principles with a customer's desire for consistency at all touch points, whether that interaction is human or not. So let's do a real quick set of introductions. Kamesh, let's start with you.
Hi, everyone. Kamesh Mula. I'm a Senior Vice President at Barclays, mainly concentrating on virtual channel optimization and product intake for our customers. Prior to that, I was in consulting for quite so many years in financial service industry at the Big Four. Thank you.
Kent.
Hi, everyone. Kent Lawson, the Executive Director of Brand and Consumer Experience at Blue Cross Blue Shield Association. I've lived my career at the intersection of design, innovation, and healthcare, most notably at IDEO and AbbVie, and trying to bring design and human centricity to healthcare.
And Jennifer.
Hi, Jennifer Borchardt. I'm the Vice President of Digital Experience and Strategy at US Bank. I support wealth management and emerging affluent digital channels, as well as a few more. I've been working in user experience for close to 30 years, most of that in financial services, including E-Trade and Wells Fargo.
And last but not least, John.
Thank you very much. Great to be here. My name is John Mosiani. I'm the Vice President of Technology at in the Americas for Appnovation. I've been in the industry for about 25 years, mostly on the agency side of the business, having worked at agencies like AKQA, Chale, and McCann over my career. Spent most of my career essentially being at the intersect of our clients' organizations, servicing the brands and being there on behalf of them in their organization to technology and partners and so on.
Great.
Thank you.
Thank you. So I'm going to kick this off with a COVID-themed question. Jennifer, the pandemic has brought accelerated investment and focus on digital and self-service by so many companies, and the customers have most certainly responded. So now that we're entering in what I guess we're calling the new normal, physical channels are reopening, and I think it's safe to assume that the increased digital usage will persist. So what do you see as the biggest opportunities to optimize digital channel capabilities within the omni-channel?
Well, I want to start by saying that instead of the new normal, the way that we're thinking about it is the next normal, because things are changing so quickly. Things are always new. So we are entering our next normal. In order to optimize digital capabilities within omni-channel, I think it's important to get real data around where are your customers going, and while the increased digital usage is going to persist, and I think we can assume that's going to remain the fact for a long time. Taking a close look at where else customers are engaging. Where are they engaging? Which other channels? When are they engaging? What types of tasks or what kind of issues are they addressing when they use these other channels? Identifying issues and pain points that come up by using voice of the customer and working with frontline employees to learn what clients are talking about, what they're looking for. User experience is really everyone's job. It's not just me and my team. They're kind of on the front lines of UX, but also the frontline workers who are directly engaging with clients. So there's a lot of very useful knowledge there to get a sense of how clients are engaging across the entire omni-channel experience. Using surveys and metrics are especially important. We've been using surveys and metrics for a long time to gauge customer sentiment, where activity is happening through the sites. But now it's especially important because clients' needs are changing, channel capabilities are continuing to evolve, and the ways and times and frequency that people are engaging with these different channels also continues to evolve. Thinking about business goals and how that aligns with user goals, where does the business want to drive digital usage? And in thinking about how we can support the experience across channels to drive people to do more do-it-yourself, to bring more activity to digital. But something to keep in mind in a recent study that reached my desk, it was found that bank accounts that were actually accounts that were opened online tended to be lower value than accounts that were open in other channels, say working directly with an advisor or a banker. And so it's also important to think about the immediate and longer term value of accounts and finding ways to improve the initial and ongoing value of accounts that are initiated online through digital channels. And in terms of the digital experience, the biggest opportunities to add this value is in onboarding and opening accounts. Some ways in which value can be added is to collect additional information from customers regarding what are their goals, what are their immediate needs, but doing it in the context of if they give us data, if they give us information about themselves, we're going to do it with the utmost concern about privacy and security and trust. I mean, that's really the foundation. But then also sharing insights, sharing education, sharing recommendations that are timely, contextual, and directly relevant to what it is that they're looking for now and over the life of their relationship.
And so I was going to ask, Kamesh, are you finding that within your bank as well, that there are people joining with joining online and signing up?
So that's actually a great point, right? Like, I haven't seen the report myself, but I have read about the differences in how customers perceive trust, right? Even though customers the percentage of active customers on digital is more, right? They're more of verification and validation, sort of like post-sale processes that customers use it mainly for, but the sale process itself is very high touch enabled, right? If you look at it, like customers have this focus where if it's a credit card or it's opening a checking or a savings account, they are more flexible to do that online, right? And digital channels. And it comes to opening up a investment account or other more complex products that the bank sells them or wealth accounts, they feel that the human touch or it gives them a sense of security, right? So those accounts you see have higher valued accounts or high net worth of accounts that we have compared to the accounts that are credit card or a checking account or savings account. So definitely we see that as well.
There's also
go on, John.
Yeah, I'm just going to say there's an obviously from a financial services and insurance perspective, there's obviously an inherent trust factor involved. If you think about consumers and all the different areas that they interact with, what are the industries that they're sharing the most sensitive and private information with, and who are they going to trust? Whether it's government, healthcare, or financial services, there's an inherent trust that goes with financial services that they are essentially providing. They've got their money in these institutions, so they kind of inherently trust those organizations in some regard.
And Randy, if I could make a point, over the pandemic, we saw for 15 years before the pandemic, the entire healthcare industry, including health insurance, including provider organizations, health systems, we've been trying to get people to move to digital health or to virtual care and telehealth. And it wasn't until the pandemic hit that we saw any sort of uptake. I mean, the uptake was miserable. And when the pandemic hit, all of a sudden people were, sort of locked in their homes, but still needing care. So I think the trust barrier went down. In other words, like, okay, I'm locked in my house, I have this need, how can I get my needs taken care of? even if it's a new channel or something that I won't get the hands-on care that I was hoping for. And through that experience, that door was opened, and through that experience, people have really opened up. And I believe Jennifer's right that this is not the new normal, but the next normal, and that people will do. Now, virtual care does not replace hands-on care, but boy, it's a great first step. It's a great, quick need. If it's 3 a.m. and your kid is coughing, maybe that's a good first step. And so I think if we look at the omni-channel experience and say, where are my quick and easy doors? Where are the doors that lead to better relationships or longer term relationships, and start looking at those doors slightly differently in the way that we design the experience that pulls them through to those longer, high value relationships.
So
one thing I'd like to add to what Ken said is that there are definitely limitations to, we'll call it physical healthcare, but there are a lot of opportunities in mental health care, and it doesn't replace talking to somebody face to face necessarily, but there do seem to be a lot of opportunities there. A case study about this actually was just presented to my team randomly, but we definitely were talking about opportunities in other areas outside of financial services, and mental health care was one of the big topics for sure.
So that's a really easy, like, especially with healthcare, this humanization. I mean, it is meeting face to face with a doctor, a mental health care professional. But like Kamesh, let me ask you, what do you consider humanizing in terms of digital capacities within banking?
So if you look at banking, like 30 years ago, it was more the relationship manager used to hold the accounts together for the particular branch, right? My father was a banker, way back in India, and if he moved to a different branch, he got transferred. As long as it's within the geographical area, some of those accounts will move with him because of the trust and relationship that he had. But that's not the case anymore, right? Banks have become global. I don't need that relationship manager trust if I move different location, as long as it's not a complicated account again, right? It goes back to my previous statement where if it's a complex account, I still trust my investment manager more than a regular retail sales manager, right? So the trust factor is very important. But now, because of the digital tools available to the consumers, and they can access their accounts, they can access the same level of service across different channels from anywhere in the world. So that kind of enables that, that removes the human from the equation for sure, right? But if you think about it, as banks go digital, there is only the agent who is a human friend for the bank. So the number of banks are being cut down. There are no more brick and mortar banks as they used to be in the past. So the agent is the key person for the bank. Anytime the interaction occurs with the agent, is good or bad, that determines the quality of relationship I have with the bank 5 years down the lane or 10 years down the lane. I wait one day for 2 hours and I get slapped with like fees that I can't explain, or the agent can't explain. That kind of leaves a very bitter taste in me, and I'm like, okay, it happened twice, it happens thrice, now I'm moving my account, right? So how do you make sure those issues don't happen within a time period? So when you look at data and analyze the data properly, even the good experience and the bad experience from a customer-centric standpoint, you kind of understand who are our vulnerable customers, who do we stand losing, how can we serve them better, and how can we immediately contact them to outbound calls, right? No longer calls coming into the contact center saying I have a problem, but like, hey, we know you have a problem, we couldn't resolve it in these X touch points, can we do it now? Can we do it with our most senior agent? Can we put him on the job so that your issue is resolved? So how can banks do that in a more human-centric way? So agreed, some technologies will remove the human from the equation, but there are some processes that the banks need to kind of bulk up on from a human standpoint.
Well, what about the idea of deepening relationships? Is that possible in this day and age with the different touch points?
I would say definitely. I'll go on, Commissioner.
No, go ahead. No, it is difficult, but definitely possible, right? So we are trying to do not at a individual, like customer of one perspective, like, for example, John is my customer, like I won't keep serving him the same agent over and over, but I will serve an agent who has a similar profile and understand John's issues in the past. So that creating that customer profile and agent profile and matching them at a contact center level becomes a very key thing to achieving that relationship.
Absolutely. If you're essentially creating that chief customer officer at the agent level, you want to be able to make sure that they match up well and are building relationship from there, as feeding them with as much insights as possible in both directions.
So, John, oh, go ahead. Go.
Oh, I was going to say, some recent work that my team has been involved in comes to mind, a way to humanize what is oftentimes a purely digital experience, robo-investing. And this is something which is very technology driven, very do it yourself. Not often a lot of humanity in the experience. And in terms of product positioning, what US Bank is doing, or rather I should say US Investments, because it's not a bank product, is in the marketing materials, in the educational content, in the onboarding experience, highlighting the technical capabilities and everything that can be done through digital channel, but also providing just awareness that there is a human advisor at the other end of a phone call if they wish to do that, and including annual check-ins with an advisor, not a dedicated advisor. But this is providing a human touch to a fundamentally digital experience. And in fact, we are using this as a way to competitively differentiate ourselves from other robo offerings.
Yeah, and Randy, I would also add, look at Chewy. I mean, Chewy is a digital online platform, and yet, Chewy acknowledges when it's your pet's birthday. They acknowledge when, if you let them know that you need to drop your subscription, they'll ask you why. Well, my dog died. And the next day he'll get flowers. I mean, it's incredible the amount of humanness they bring to all of the aspects of owning a pet and loving a pet. And they know that. They understand that love that exists between the human and the pet. And they're trying to deliver that. Even though it's an online experience, they're sort of over delivering on the human experience.
So I'm really glad you brought up Chewy. There's actually one other thing that they do that I think is really delightful. In addition to those, to the flowers, in addition to the pet birthday card, which I love, by the way, they also randomly send you a hand painted portrait of your pet if you uploaded one.
Of those, yeah.
And I don't know, it was a surprise when they sent me one, and I am a Chewy member for life. I love them.
Okay,
so I'm really glad you brought that.
You look at that and you say, well, so how is buying a house similar to owning a pet, right? This is a place you are going to raise kids and spend your time and have, tears of joy and tears of sadness inside this home. So why aren't banks bringing that kind of humanity to their offering?
Well, now I'm gonna pick on you, Kent. You left a window wide open for me.
Okay.
So yes, humanity, very important. Banks, a little difficult to deal with. You're a little, emotionally charged when you're dealing with them, but you're especially vulnerable when you're dealing with health insurance. So yeah. How do you humanize the health insurance aspect?
Well, and I would say maybe it's not vulnerable while using health insurance, but during the health event, right? And so we buy health insurance in a completely different behavior or different, sort of emotional set than when we use health insurance. And so we as companies, and it doesn't matter whether you're an online pet supply, a bank, a grocery store, online grocer, or health insurance or healthcare, we need to understand what are the emotions that our customers are going through at the time that they're using versus at the time that they're buying. And how can we meet them at the different emotional states wherever those might be along the way. And so when you've been in a car accident, when you've just been diagnosed with cancer, when you've just learned that you're going to need a knee replacement, these are extremely vulnerable times. And the thing is, doctors and health insurers understand sort of the journey ahead, and we should be doing a lot better at meeting our customers, our members, where they are and where they're going to be, anticipate their needs, so that we can design the experiences, maybe it's heartfelt experiences, maybe it's understanding the segmentation, the behavioral segmentation of our customers, and then leaning into those. Do they need extra information? Do they need someone to listen to their stories? Do they need someone to hold their hands? We need to meet them at those emotionally charged places.
Will this be the next normal for healthcare?
I sure hope so. Although I've been working on it for years, and I think we're getting closer, but I still think we're a ways off.
I've always found it tremendously fascinating, particularly as I got kind of exposed to the health insurance business as well as the wealth management business. The challenges of the amount of information and data that is available to the business, but how regulation obviously has to throttle what it is that you can say or should say to those individuals. So it's a very delicate balance of being able to kind of make that experience so personal.
I would say that there's data challenges even beyond what John just mentioned. Of course, there are regulatory constraints, but just the sheer amount of data which can be shared, the challenge is really making it consumable, actionable, and meaningful. And that is where humans can provide a ton of value. And also a lot of that value can also be delivered through digital channels. So I think that's also a consideration.
Sorry. One of the things that comes to my mind with data is, right, like how do you govern data within the organization, right? Who has access to this critical pieces of personal information from the customer, both transactional as well as personal data? Having that governance process well established kind of provides a sense of trust. The end product may be something else, right? Like, I know when you're buying some stuff in a Home Depot, and I know that you're trying to improve your home and may provide a home equity loan or something like that, like an ad for that. But how I'm arriving at that particular end result and the process steps that go on within the organization from a data-centric standpoint are very critical. Like, who has access to the data? Are they able to tie to an individual customer, or are they seeing the data as an entire set? Those are very critical. So a CDO organization that is very heavy that has control over the data would be the key to the success of that MI or machine learning or AI initiatives.
So in terms of data, there's, like you were saying, there's so much data, but now how do you turn those into actionable insights? John, let me ask you, like, would financial services organizations turn data into like a strategic capability? Well,
clearly, data can mean different things to different people, and there's just so much that is being generated and consumed at an accelerating rate. Three foundational types are obviously, transactional, there's behavioral, there's operational, and there's obviously degrees of sensitivity within that information. And as Jennifer mentioned earlier, this is about deriving insights and anticipating where our customers are going to be. So this data can be generated by the customers, they can be generated by our employees, they can be generated by systems. So there's just a ton of data that's not only here, but is going to continue to be there. And how do you make sense of that? And having that data be locked into organizations or technologies, as Kamesh mentioned, is really inhibitive for discovery and making it tremendously challenging to be able to derive insights out of them. So, adding more human processes in between to stitch things together only adds to the complexity. It's inherently more error prone and can even erode trust. So while we talk about a centralized, data service, to turn it into a strategic capability. As Kamesh mentioned, there's got to be governance involved and built in a certain way. So while the system can pull this aggregate data together to try to make insights, clearly there's got to be a governance model attached to it in terms of what can see and who can see what. But ultimately being able to pull it together as a shared vision of what it is that you're trying to do with data as a service centrally, that would be my recommendation.
So let me ask you about technologies. So new technologies are coming to market almost, it seems, every hour. Yet dealing with the legacy technology continues to be a major challenge. How would you advise overcoming this?
Well, well, those of us that are in technology might be a little bit more sensitive to the term legacy, with a little bit of gray here and there. It seems like, you know, technology is being labeled as legacy pretty much from the time it's being deployed. So we just gotta be mindful of that. But in seriousness, obviously, there's been a lot of advancement, you know, in terms of experience and the technologies driving the experience. And our own recent research kind of said as such that there's recognizing that there's a lot of improvement, but there's clearly a lot of room for improvement. So, you know, there's in financial services and with most organizations, there's inherently a lot of complexity that goes into delivering the business and creating a great customer experience. Obviously, it takes a village. It takes a lot of diverse individuals from different skill sets that have to be organized by why, not just what you're trying to do. So you need to set a North Star. You need to give that collective organization a common purpose. And while there's been a lot of gains in understanding of digital experiences in the omnichannel world, legacy technology just cannot simply be modernized just to get to the same state as it was yesterday. We must move the experience forward in smaller and more frequent increments, reducing complexity, reducing technical debt. You know, one of my pet peeves has always been this idea of lift and shift, right? You know, there's a old quote that that I always refer to is why recreate essentially that hairball, hair for hair? We've got to be able to move things forward. So, you know, having spent my entire career at that intersect of technology, organization, and customer experience, it's obviously not just a technology matter. It's about delivering change while navigating the organizational complexity and just bringing these stakeholders together with a common agenda.
Whenever I hear the term lift and shift, it's always a red flag to me that this is going to be a lot more difficult than the planners or stakeholders anticipate.
Mm-hmm.
And so that's the time I raise my hand and say, let's talk about what this actually is going to take and what we're actually needing to do.
Definitely.
Absolutely.
You know, I have an opportune moment to ask you guys, because you know, we were talking about data. How do you keep things from being predictive versus creepy? Like making sure that you are asking the right things and not too many things. Like where is the line?
So I'll take the question, right? So again, the line, you would know when it is creepy, to be honest. Like if you put yourself in your customer's shoes and you get a message saying, oh, I know it's your anniversary because you just bought some flowers, right? That is obviously over the line. Whereas I'm making a big purchase in a departmental store, right? And I don't have the funds. Maybe my card will get declined. So sending that, you know, creating that options for the customer, saying, okay, you could draw upon your line of credit, or you have another account. Do you want us to transfer the money from that account to this account? Right? And doing that in an instance leads to customer wow factor, right? Instead of saying your card is declined 100 times and making you, you know, feel a little weird, even though you have the funds with the bank in a different account, right? So those sort of things, using data and machine learning algorithms to do that and enable those interactions with the customer is awesome, and telling me when my anniversary is or when my kid's birthday is creepy. And so that I could buy some toys or something like that, right? Yeah.
So I think Kamesh is right, and I think that relationship is built over time, right? And so you can't come out of the box with all the answers. You have to build that relationship, that sort of give and take relationship over time. And it might be, a month for one industry and 10 years for another industry, but it's built over time. And once you establish a really deep and good working relationship, then there's a whole lot of things that may have been creepy at the beginning that become less creepy at the end.
Absolutely.
Just like a friendship, right?
It's a matter of experimenting okay, initially it's creepy, then it's a wow factor, right? There.
Right.
Yeah. And also I think collecting and then sharing insights to reflect the data you've collected, it does need to happen incrementally over time, starting small, adding value, building trust. So you start with the small things, you do them well, and then build up to the bigger things as the relationship deepens and as the need to make it more complex.
Absolutely, and also one more thing is you need to be able to predict that event with utmost, with a greater than 90% probability, right? If you can't, then it lands in the creepy zone, right? Because it's wrong. First of all, what you're predicting is wrong, and you have delivered it. So you have to be very sure what your channel of delivery is and what the message of the delivery is based on your algorithm's strength. So don't deploy something that is half-baked.
So we are unfortunately very short on time. So I'm going to ask one last question with expectation of short answers. But Kent, I'm throwing this at you first. So with the world in such flux, what are the two most important imperatives that all businesses must focus on right now?
Those two, I think, would be, and it's a great question, Randy. I would say, number one, leadership needs to focus on culture and needs to focus on building a consumer-centric culture. Number two, it's personalized experiences. As Kamesh said earlier, or maybe it was John said earlier, it's an N of one. One customer equals one experience. And let's figure out how to deliver personalized experiences throughout the customer journey.
Jennifer?
I was also going to say maintain user centricity. That is so important. What we do is in service of our customers. So the one thing I would like to add is to stay curious. When you're looking at what else is going on out there experientially, go beyond just your immediate competitors. If you're a big bank, don't just look at other big banks. Look at fintechs. Look at experienced leaders. Look at startups and see not only what they're doing, but why they're doing it and why it works. And then thinking about, well, if it works there, how can it be adapted to work within the realities or the goals of your own organization? It's not just a lift and shift, in other words.
Perfect. Kamesh?
One thing comes to my mind is do the ordinary things extraordinarily. Don't make mistakes that are, okay, show $0 in my bank account, even though I have millions. So don't do mistakes, right? Number one, for the big banks and insurance companies as well. Number two is, instead of user-centric, I would replace it as human-centric, right? It's both sides of the equation, the customers as well as the agents or the employees. So provide the employees with the right digital tools so that they are successful and they'll make your organization successful for years to come.
And last but not least, John.
Well, I would absolutely echo everything that the panel has said. I'll reiterate the human centricity part, obviously, but I'll also reinforce the need to vigilantly remove organizational obstacles to be able to get there. So, whatever it takes to be able to, enable your employees, your customer agents, your organization has to move towards that human centricity. And any silos that inhibit that or add complexity to being able to get there, I would encourage to move that out.
Perfect. Everyone, I wish I had more time. I don't. But thank you, everyone, for joining us today. I appreciate it. It's really fascinating.
Thank you, Randy.
Pleasure. Thank you, Randy.